You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined with K-State grain economist Dan O'Brien. Dan, thanks for joining us once again.
Thank you, Shelby.
Starting off our grain market conversation with how are futures looking?
In response to the USDA report that came out at 11 Central Time, generally we saw positive moves in the grains. The most, of course, in the soybeans. That's where the biggest change in the USDA's supply-demand balance sheets domestically occurred, but also support in the corn and kind of sympathetic support coming from wheat. If corn went up, wheat was going to as well in a competitive marketplace. But November soybeans closed at 12.90, up 37.5 cents, and that's a sizable positive response. There was some movement that's been occurring in the soybean meal market that was also supported, as well as a shaving of U.S. projected yield, and we'll talk about that in more detail in just a minute. D's corn ended up at 4.96, the lead contract, up about 8 cents, and D's Kansas hard red winter wheat also closed up about 7 cents, 7.75. So as market days have gone, generally a positive response. It's going to be It'll be really interesting to see what happens in coming days once this news is digested, and then we start to look at export movement and other reports and information that comes out. So generally a positive response. It does set the stage now for further yield information coming in I believe it's the November 9th report, and then ultimately out into the January final report for 2023. So still a ways to go, but we keep grinding towards eventually being about we're approaching halfway through the corn harvest, and about the same for soybeans, as we're getting a better picture of what we have out in the fields, and again, give us one more month, and we'll be able to hone in, I think, all that much more accurately on what our supply demand at least our supply situation is, and then we'll turn our attention to demand fully, and move on from there in terms of price discovery.
And we'll talk a little bit more about that USDA report here in just a little bit. But before we get to that, how are cash prices doing?
Cash prices are, uh, I, I, I guess I'm straining to want to say some statement about where cash prices are relative to costs, see if they're profitable or not. When you look at spot corn prices right now, again, at harvest, basically for most folks, we're hovering around on the low end about 484 in 481 in Topeka, Columbus, eastern part of the state, 521 in Garden City, and generally, if we're blessed with decent yields, we're around break even costs, a little bit more. So I think, of course, ag producers, if they're blessed with good yields, then they're in all that much better of a shape. If not, it strains the cost per unit. But overall, we're not far from cost production estimates on irrigated and non-irrigated corn. Grain sorghum, still, as we've talked about in recent weeks, still see some export demand showing up at a strong price in the Hutchinson area at $5.51. Most elevators are not at that level, but there are one or two terminals that is the top price that's out there. So that's and that basically is stronger than any corn price that we're seeing around. Pretty strong relative even to the ethanol plants in the state for corn. Other prices that are looking pretty good. 536 in the Salina area, 511 in both Colby and Garden City for the top price, 506 Topeka, a little weaker, 461 in Columbus for grain sorghum right now. For soybeans, the run up that happened in the futures reflected in the cash prices. You're looking at a high of, again in the Hutchinson area, about 1254 as the highest price. Again, most country elevators are somewhat below that. That's a terminal that put out that top price. And again, 1245 in Salina, pretty strong price. 1235 Topeka, 1205, 1195 in Garden City and Colby. For wheat, again, even with that 7 cents increase, again, that was reflected in the markets, but we're still seeing prices about on the top end of about 650, 655, and that's Salina, Topeka, Hutchinson, and a little bit lower in the Garden City area, 615, 590 in Colby. What's interesting now is also to look out towards next year's forward contract bids. Like people are as we're into October, we're sowing wheat in a lot of areas, particularly with some moisture that's come through of late. You're looking at forward bids for 2024 crop with at the highest in the Topeka area. Interesting, 663 is a forward contract bid. Hutchinson 653, 643, 633 thereabouts in Colby, and 638 in Columbus. So are these at or above KSU cost of production estimates? Generally, whereas we used to kind of hang our hat on about $4 for wheat, and if in our budgets we plug in 40, 45 bushels, then these aren't that far above break even numbers. But if we get 55, 60, 65, we drop our per unit costs, and these would be quite profitable. So we're looking at a situation where at just so yields, so average yields. I don't want to criticize them. Of 35, 40 bushels, and again, most producers are hoping for a lot more than that. Then we're about break even or so. But if we get higher yields, then we'll be doing a lot better. So again, you're looking at the I guess the prospects that affect agricultural producers in Kansas. It's ultimately a moisture and production oriented enterprise that we're dealing with, and from there we try to manage the marketing the best we can.
And kind of going a little bit past Kansas now, the USDA did on the 12th put out their World Agricultural Supply and Demand estimates. And Dan, what were a few things you saw in that were interesting domestically?
Well, we were watching the yields for corn. The USDA did lower its estimate of the U.S. average corn yield from 173.8 to 173, and that was not a given that would happen. There's, in fact, there's several very credible groups, commercial groups that had predicted yields to move back somewhat higher, but came in at 173.0 per acre as a U.S. estimated corn yields. Again, some states higher, some states lower. I think the Kansas number was down about 5 bushels per acre. So in future reports, we'll talk more about that. But the overall U.S. number is just over 15 billion bushels, and by the time you run through the supply demand balance sheets, a little bit of shaving of the export number, a little bit of reduction in feed and residual from what had been in the September report, you end up at, again, 2.1 billion bushels carry out. Stocks to use about 14.7%, a little bit higher prices, about 495. We were at 490 as a projection coming out of September. So again, we're far enough into this now in terms of yield reports, or we'd be just really surprised if the ending stocks, if the supply demand balance sheet worked out in a way that dropped ending stocks another 100, 200 million bushels below 2 billion, and really put us into a tight situation. So I guess for the industry sake of users, this is more of a moderate price that should be help livestock feeders and energy users and exporters to be able to procure or move product a little bit better. So they're hoping. I would say also on soybeans, if anything, that probably a bigger surprise would be that the USDA's projection of about, I think it was about 50.1 bushels per acre dropped to 49.6, and I'm sure there'll be people that are wondering if that will drop more in the upcoming November report. But they did see a reduction in the U.S. average yield down to below 50 bushels per acre, down to 49.6, about a 4.1 billion bushel crop. You run that through the supply demand balance sheet, and shave exports about 35 million, add about 10 to crush, which is kind of the trend we're going. We're stronger crush, weaker exports. Generally, that is our trend. Ending stocks still at 220 million bushels, and just kind of an emerging idea that the trade isn't willing right now at this point to concede that we would drop below 200 million bushels in terms of ending stocks for soybeans. And that'd be down to 5.2%. We certainly have gone there in the past, but there's resistance right now. The idea of trigger rationing, prices move a lot higher. So anyway, we came out of that report for corn and soybeans, the two biggest players with that change. One thing I should add in for grain sorghum, there was a sharp drop in the U.S. grain sorghum yields and production. In essence, we dropped the yield number down from 60.9 to 57.4 bushels per acre, shaved about 21 million bushels off of the production number down to 360, and reduced exports about 10 million. So for grain sorghum, grain sorghum out here in the Western Plains was a recipient of tougher weather conditions early on in the season, and at times later on. And we've seen it in our neighborhood out here in Western Kansas and in parts of it, and it showed up on the supply demand balance sheet. Prices for sorghum basically matching corn right now. Although, as you and I have just talked about, cash prices for sorghum at this point are a little bit higher, but still for the marketing year, the USDA's I guess taking more of a conservative line and just saying, well, they're the same until we know better. So.
And Dan, as we wrap up today's conversation, kind of sounds like there's been a fair amount of movement in those supply and demand balance sheets. However, is that holding steady then for corn as well?
Well, yes. The one thing I think that that the area of movement that we'd seen for corn was to reduce feed residual usage by about 25 million bushels compared to the 5.6 billion that's projected to be used is a small change. It's more of an on the edge adjustment. And if we're since we talking a little bit about feed and residual use for corn, wheat's a competitor. And when you look at the feed residual usage figure for wheat, one I guess advantage of lower prices for wheat is that now it's much more readily fed. It becomes more of a competitor for corn, and maybe that's some of the trade-off we've seen in those other feed grains, in that the feed residual number usage number for wheat was increased by 30 million up to, well, from 90 up to 120. So where does that happen at? Well, places like Southwest Kansas, wherever there are feedlots at, now it's that much more of a competitive situation. Generally, if there's a rule of thumb, we look at 105 to 110% of if wheat gets down to again to 105 to 110% of corn, then it generally becomes more of a competitive option for wheat feeding, and this is where we've gotten to now in the wheat market, and that we've dropped far enough that, hey, it looks like wheat feeding probably is more of a possible enterprise.
Dan, I appreciate you taking the time to join us today and give us a grain market update.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.